With so many loan options out there, how do you know which mortgage fits your needs? From FHA to VA, conventional loans, each loan type offers unique benefits. Today we'll be breaking down each option to help you figure out which loan makes the most sense for your personal situation. Picking the right loan is crucial to securing your financial future, so drop the word FIT, F-I-T, in our comments below to receive the breakdown of each loan type we'll be discussing today. Hi, this is Joe Harris with Morgan Financial. I'm here with my counterpart, Lindsay Clark. How you doing, Lindsay?
Good. How are you, Joe?
I'm pretty good. What's going on today?
Trying to learn about loans.
Awesome.
Different loan types.
Different loan types.
Yes.
I like that.
Yes. There's
Good.
quite a few.
Good.
Lots of options.
Let's get going.
Well, I'm hoping to pick your brain about it. So I wanted to start with first-time home buyers. Now, I know better, but are FHA loans strictly for first-time home buyers?
They are not. They are not.
Can you elaborate?
Yeah. So everyone thinks, they hear FHA, they think first time home, okay? It's not. First time home buyer is not necessarily an FHA loan. FHA loans are the Federal Housing Administration, right? Mm-hmm. And so that's just a type of loan the government sponsors, or they guarantee the loan. If the lender has to write the loan, they have to write it to the FHA standards. And if they meet the standards, then they will be, guaranteed by FHA standards, okay? So here's the deal, though, is that FHA is a type of loan to do. And it might be the best type of loan, but it might not.
Yeah.
I think about first-time home buyer loans. If you're a veteran, there's no better first-time home buyer loan than a VA loan. 100% LTV for qualified applicants. Now, not everyone qualifies, obviously. You have to be an eligible veteran. And, there's other great features of VA loans, such as no down payment requirement, as long as you qualify. That they have some other lower credit, some if there's major credit events in the past, they're a little less stringent on qualifying on things. So VA is a great way to go. Now, if sometimes a conventional loan or conforming conventional loan, I think we might have heard of Fannie Mae or Freddie Mac. Those are the quasi-governmental sponsored entities. We call them the GSEs. But really, they're the people that say, look, if you write loans like this, we'll buy them from you. Mm-hmm. That will give you more money to lend back out. And so they have first-time home buyer loans that put as little as 3% down, whereas FHA is 3.5% down.
That's a conventional loan for 3% down?
That's a conventional conforming loan that's actually a lower down payment requirement potentially for qualified and eligible applicants. Mm-hmm. You have to qualify, obviously. All these things we're talking about. Has a lower down payment requirement than an FHA loan. Now, FHA does have some features that make it nice for qualifying, and they have a little less strict standards on the debt to income. In other words, the amount of debt that you have versus your income. You can have that a little bit higher of a ratio, which means you can have a little bit more debt and things. But that doesn't mean that necessarily conventional isn't a better way to go, depending on your credit score, how much you want to put down, how much your, some other credit qualifying items.
Okay. Can you talk a little bit to mortgage insurance as it relates to FHA loans versus conventional loans?
Okay. So FHA loans, people say, well, if you're comparing them to a conventional loan, and let's just say it's the same amount of down payment. Let's just say it's a 5% down payment loan. Conventional might have a slightly higher interest rate. The mortgage insurance, depending on your credit score, might cost you a little bit more. But FHA has what's called an upfront mortgage insurance premium that's financed back in the loan and can make an FHA loan more expensive than a conventional loan. So a lot of people, or I should say a conforming conventional, a Fannie Mae or Freddie Mac loan. So it's always a good idea. If you're a first-time home buyer, don't tell your loan officer, hey, listen, I need an FHA loan.
Right.
Work with your loan officer. Understand your options. Now, if you're in a rural area, that's a hard word to say, rural sometimes.
Two R's.
Yeah, a lot of R's. But if you're in a rural area, then there might be an USDA option. Yes, just like the beef, right? It's same organization because they are trying to provide financing in rural areas, and it's 100%. It's 100% financing for qualified and eligible borrowers. So there's lots of options out there: VA, FHA, conforming, USDA. And all of them have features and benefits that might work for a first-time home buyer. It's important to know your options.
Yeah.
I wouldn't just come in hot saying I need an FHA loan and that's all I need.
Yeah, I think thinking that you're supposed to fit within a certain box never typically works out whenever you're speaking to a loan officer because they have so many options. So don't go in there assuming. Go in there with an open mind.
Yeah, but some of these big box lenders, they're going to give you what you asked for.
True.
And it might not be the best option because that loan officer, you don't know what you're getting. You might get someone that's been around for a while and knows what they're talking about, or maybe it's a brand new person who just doesn't understand how to present options to you and allow you to choose the one that's right for you.
Mm-hmm. You had mentioned a little bit with VA loans eligibility. Who specifically is eligible for VA loans?
Veterans. There are some specific eligibility requirements, and typically if you're retired or you're departed from whatever branch of military, you get what's called a DD 214, that form. And you know this if you're a veteran and if you're already out of the military, so to speak. And with that form, we usually take that to make sure you have a certificate of eligibility. And that, by its definition, means you're eligible. Doesn't necessarily mean you qualify.
Right.
It means you're eligible for a VA loan. And typically, it's someone that's either served during wartime or had a certain amount of service in the military.
Gotcha. So what factors should you consider when deciding which loan is the best fit for you?
That's a great question. So I would look at things like, is your goal to pay off that loan super fast? Is your goal to maximize your cash flow? Is what is your goal? But everyone's goal is a little bit different. How much are you putting down? What's your credit score like?
Yeah.
Should you be working on your credit score to improve your options? Right?
Right.
Are you ready to buy a house? Is your credit score good? Do you have money saved? So the amount of down payment is going to be a big thing.
Right.
That loan to value, how much you put down versus how much the house is, will help either showcase some options. Like if you're going to put 20% down, FHA might not be the best option, be the best option for you because you're going to have mortgage insurance. You asked about mortgage insurance.
Yeah.
Mortgage insurance can be done lots of different ways, but most people recognize it with a monthly payment that allows you to put less than 20% down. Now, in the case of FHA, if you put 20% down, you're still going to have mortgage insurance, monthly mortgage insurance. So you might want to take a look at a conventional loan, or if you're eligible for a VA loan.
Nice.
Or if you're in a rural area, a USDA loan.
So in closing, what advice would you give somebody that is just starting out when it comes to going to get a mortgage?
So I would make sure that you get a good recommendation on a professional loan officer who knows what they're doing. You don't have to be a mortgage expert. You have to have a trustworthy mortgage expert that you can use. By the way, if you're not a subscriber, now's a great time to hit the subscribe button, like, share, do all the things the kids tell you to do so you can come back and see us every once in a while, okay? But that being said, the right thing is to make the first step is if you're a do-it-yourselfer and you're trying to get the information, you want to look at how much money do you make versus your income, versus your debt. That's called the debt to income. How much money do you put out every month versus what kind of monthly debt obligations do you have versus your income, And it's not cell phone bills. It's things that would show up on a credit report. Now, I'm asking people to do a lot of work, and they don't have to. They just have to know, is their credit good? If it's good, what options do you have? How much are you putting down?
Right.
That's important. And ask around, do some research, go on the internet, find a trusted loan officer that friends and family might have worked with, or a real estate agent, vouches for, so to speak, or refers you to. That's a good place to start. And then,
Awesome.
and then hopefully that loan officer will guide you correctly. But if they're giving you information you're not sure about, if they're trying to put you an FHA loan, you're putting 20% down, ask them why, right?
Yeah.
Ask some good questions because maybe their credit score is in such a place that that's the only loan they qualify for.
Right.
Typically if you're under 620 on your credit, your options get slimmed down significantly, and your rates start to go up. So maybe you want to work on your credit.
Yeah.
So
Awesome.
it's all about finding the right fit.
I love it. With that being said, drop fit in the comments below
Drop
if
fit
we
in the
talked a
comments
lot for you
below.
today and you'd like a recap of everything we discussed.
Yeah, what we're going to do is in that catalog, in that ebook that we're going to send out, if you put fit down there, we're going to send them an ebook.
Yes.
Okay, we're going to put more specifics on these guidelines. And the whole point is not to be a mortgage expert, but just to understand a little bit better your options.
Yeah.
Cool. That's all I got.
That's all I got too.
Thanks for joining us today. Like, share, subscribe, do all those things. Comment down below with questions or FIT, F-I-T, and we'll see you next time.